Well, the auto sector is very difficult right now. Ford is a poster child of that, but Garrett Nelson of CFRA says there are still opportunities. Garrett, thanks so much for joining us. And you really got to be nimble on those opportunities. Let's just spend a beat on Ford. Quite a disappointing quarter as it warns about its profit outlook.
That's right. So they beat on the bottom line for the quarter, but it was disappointing guidance, and that's why the stock is trading significantly lower this morning. And they said their full year adjusted EBIT would come in at the low end of the prior range of 10 to 12 billion. So they're now guiding for about 10 billion for the full year. And of course, that's after the Q3 beat. So that implies that management has a more bearish outlook than they did before for the fourth quarter. So the shares are taking a hit today.
And you're neutral in the stock, so this is not one that you would chase. But the ideas that you brought to us in Hot Picks, they are in the auto sector, but they're not the makers. It's AutoNation, it's CarMax, it's Group 1 Automotive. Why is this the right sector to be in?
Yeah, so we recently turned positive on this sub-industry of auto retail. Earnings have been under pressure for a couple of years now. Ever since new vehicle prices peaked, which was late 2022, vehicle prices have basically been moving sideways to slightly lower, and that's really hurt the margins of the vehicle sales segments for the dealerships. So not only new vehicle sales, but also used vehicle sales. But what people aren't talking about, kind of off the radar, is the fact that affordability has quietly improved to the best level in 3 years. And so when we look at that, that's mainly due to wage increases. When we look at those statistics and also an expectation for declining interest rates in 2025, we think the outlook is much brighter and that the sector will resume, the industry will resume earnings growth starting next year. So we have turned more positive. As you mentioned, top picks, AutoNation, Group 1 Automotive, CarMax. We also have a buy on Lithia.
Just in valuation, AutoNation, Group 1 trading at single-digit PEs, CarMax, 27 times. Help me reconcile that.
Yeah, this is mainly a call on the trajectory of earnings revisions. So if you look at consensus estimates, they've come down a lot over the last several quarters to the point where we now think they're too low, and the analysts are underestimating the uplift in on the top line from higher new vehicle sales, as well as higher margins in those relatively low margin segments of new and used vehicle sales. And so, our call is not so much based on valuation, but on the fact that we think estimates are too low and that the stocks will benefit as estimates are revised higher in the coming months.
I mean, we can't talk about this space without talking about the insane comeback of Carvana. Do you have any thoughts on that? I mean, the rally has been stunning, both on a stock basis and the fact that we thought maybe this is a company that was going bankrupt.
Yeah, so not a name that we currently cover directly, but we have covered in the past. And the turnaround has been dramatic, and they've really benefited, starting with COVID, which unleashed a lot of new used vehicle buyers. Carvana, of course, a used vehicle pure play, same as CarMax, and that really helped engineer a turnaround. But it was a very distressed name, very high debt levels, highly levered, and so the better than expected performance that they've been able to the turnaround they've been able to engineer has really led to a dramatic rebound in the stock price.
Absolutely.